What's going on, everybody? Good morning, good morning. Hope you're all doing well. Let me check the chat here. If you can like the video, I appreciate it. Per usual. Get this week started. We only got 22 likes, 100 people in here. Let's get that like button going. Good morning, Nico, Lil, Oki, Sabius, Artie, Berto, Caballo, Tom, Crazy Eddie, John, Dave, Miko, Akbar. Good morning, everybody who's in here. Your name is Brian. All right, good morning. Good to see you in here. Master, Memory, Chucky, Marius, Robbie. What up, Bob? Shahir. Tom, good to see you in here. Looks like the usual crowd. Looks like a little bit lower viewers this morning. Probably do it on Monday. Evelyn, good morning. Hope you all had a good weekend. I know I did. Igor, what's up? I'm doing well. Thank you for asking. I will get started here in just a second. Checking a few things. If you're wondering, I'm not doing anything today. So, just so you're aware. It's going to be more of a tape reading, learning session, Q&A, whatever I can go over to help any of you, then I'm going to do so. I'll explain my reasoning why that is. So, for those who are eager to be here just for signals, you're just here for a signal. Well, today's not the day, unfortunately. Sorry to burst your bubble, but I'm not going to be giving out any signals today. Not that that's the point of these live streams at all, but I know a lot of people are here for that particular reason. Not going to be happening today, so I'll explain my reasoning for that and why that is. Let me check the chat. Felix, I appreciate that. Thank you very much. Carlos, buenos dias. Felix, Vertigo, Samuel, Chaser, good morning. Good morning, everybody. If you can like the video, I appreciate it. It takes 1 second. Just go over and click the like button real quick if you can. Romer, good morning. Wolf, good to see you in here. I'll go trading. Once we get to 100 likes, I'll start the stream here. I know, OT trader. All we need is about 20 more. You guys can do it. I believe in all of you. Akbar, no. I'm a man of my word. I don't take back what I say. I even said this just yesterday in the weekly forecast, so I wasn't going to be trading today, and I'll explain my reasoning for it. Not that much volume. Let me check. Could be on your end. Again, I never know with live streaming because people say it's good on one side, some people say it's bad on the other, so I have no idea. Alright, we're at 100 likes, so I will start the live stream. Alright, everybody can see the screen here, yeah? I'm going to assume you can see the screen here. Yes. Perfect. Okay, so if you were there yesterday for the weekly forecast, I did a top-down overall analysis. Nothing really changed. Nothing overnight happened significantly to where I would change a overall perspective or bias upon this. If you look at look at the economic calendar, look at the time of the week. We are on a Monday with no economic news driver events after Thursday and Friday of last week, which were basically major days, right? Expansion-based days. If you ever have large expansions, what do those typically lead towards? It can lead to consolidation, seek and destroy, low probability, 50-50 conditions, which is kind of what I'm looking at currently. So knowing this, what I already set for the week was, okay, if I know that Monday has no economic news driver events, the higher time frame price itself is unclear to me. What that's telling me is to sit still, do nothing, and all I'm going to be doing is tape reading. So imagine that perspective and the weight lifted off your shoulders is, okay, today all I have to do is just tape read. I don't have to make a decision. I don't have to be inside a price. I don't have to feel all these emotions. All I have to do today is just simply tape read. Like, oh, wow, okay, cool. And I get permission to do that. I'm giving myself permission to do that. I don't fear missing anything. I'm not going to be mad. I'm not going to be upset. Price trading to a certain level and me seeing it, I'm not going to be upset about it. Why? Because I understand the rules and things that are set out for me. If I wasn't live streaming, then I probably would have slept in today and I probably wouldn't be looking at the charts. But since I'm here, I'm going to tape read. We're going to go over certain areas of price and be like, all right, watch this level, watch here, see if price wants to trade to it. And it'll be a good example is if, okay, price doesn't trade to this level, it doesn't respect this. All right, that's the reason why we don't do this. And even if it does, it's still just a good learning experience. I don't feel any type of guilt or fear. I don't feel that. So there's going to be days and times throughout your career where you have to elect to say, all right, I'm going to tape read, I'm going to do nothing. If I looked at the whole week and I had to place my odds in a favor, if I only had, let's say you had 2 bullets for the whole week, I only had 2 shots, 2 trades the whole week, I wouldn't be putting in this day. I can tell you that. I would rather place it on a day with a news driver event, and we already have somewhat of the week completed. So Wednesday, a Thursday, those are the 2 days I'd probably pick. That's the way my mindset works. Where I look at, I'm not looking at each day saying, all right, I need to trade, I need to push something, I need to be inside of the market. Most of you are doing that, you're never going to be successful. I'm going to be straight up. If you try to push every single day, you try to do something every single day, every single week, I mean, the probability of you being successful is very low. So hopefully it makes sense. I'm giving a debrief. I'm giving a caution as to why I'm not going to be trading. So again, for those who are here for signals, it's not the place, not the time. Again, higher time frame. Weekly time frame, if I was to look at a weekly time frame candlestick, I was looking at this week and I was trying to visualize what it would look like. I can't get a good read on it. I can see it both ways. It's really not a decisive close on last week. So I'm trying to visualize which way would it go, which way would it unfold. Well, right now I'd probably look at higher prices overall. So I'd be looking at last week's high. If you're ever looking at just a weekly time frame, you're looking at a weekly candlestick, you say, man, I just can't figure out this narrative stuff. I can't figure it out. Simplify it. Go out to a weekly time frame, especially on a Monday, a Sunday. Look at the candlestick and say, all right, which way is it going to unfold? Is it going to unfold up or down? Okay, cool. You want to go up? What are we looking at? I'm looking at this previous week high. That's what you're focusing on. If you don't get any patterns, any entry patterns that unfold towards the previous week high, then you don't do anything. All right, cool. I'm bearish. What am I looking at? The previous week low. All you're doing is you're looking at the previous week high and the previous week low, and you're using that as drawn liquidity. Obviously, you go over different things on different time frames to give you better insight and to give you better confluence. But to simplify it all, you look at the weekly time frame, you look at the previous week high and low, and you say, all right, which one is it going to unfold to? And you focus on that. Daily time frame in here, we discussed last night this inefficiency. This is the basically point of interest this week where if this does not hold, it does not provide price, support, then I'm not doing anything probably, or I'm probably wrong on the idea. But overall, I'd be looking for higher prices still. There's nothing telling me to look for lower prices or to short this. So that's what I'm looking at, right? And I preferably would want to see the lower portions of this stay open, preferably underneath the CE, the equilibrium of the fair value gap. I'd want to see this as a breakaway. Why? Because if we dip underneath that, it's probably not a good sign, especially when we're in a weird range. We didn't close above this high. It's very indecisive. So again, that's another part of why I'm just sitting still today. I'm not doing much. 4-hour time frame. Just remove all this. Refine everything else. I'm going to be looking at the left side of the curve. All I really see is this inversion that price is resting inside of. Drop down into a 1 hour. Yes, I know there's an orange folder, but I'm not really interested in that. Again, I don't even care. Even if today had a red news driver event, I'd probably just be sitting still. Most Mondays, I don't do anything. I'm looking at a different monitor. I just want to annotate before we probably reach up into it. These highs here, the relative equal highs, is probably what price is going to gravitate towards. Do I feel any type of way about it if it hits it? My entry pattern prints? No. What we're doing today is we're tape reading. It's a very good practice, especially for those who have never done it, or you're trying to wonder what is tape reading. You're looking for a drawn liquidity, and you're looking at basically areas of inefficiencies, whatever you want to call it, your entry patterns, your multiplier, and you're seeing how price reacts. How does it move away from it? And you're just journaling that. That's all you're doing. And it's just practice, it's repetition, it's pattern recognition. Those type of things are important. So I'll probably do it on this one. That's S&P. Excuse me. So focus on the buy side here at 18,640. And if it trades up into it, guess what you do? You screenshot that and you put that in your journal. You say, all right, Monday morning, February 26, 2024. Before the open, we had buy-side liquidity that was resting above us from last week's highs. I was annotating how price should gravitate up into it, and price went up into it and tagged it. That's all you'd put in your journal. Nothing more, nothing less. You don't say, I should have traded in this. This is what I should have done. No. You just say, all right, this is what I thought price was going to do, and it traded up into it. So you have sell side beneath us as well. We have relative equal lows. If you look at overnight, we expand higher. What is price respecting on the right side of the curve so far? We're respecting bullish PD arrays. We're disrespecting bearish. But what we're going to do is on the 15-minute time frame, we have this SIBI here. Look at where price stopped earlier. And you extend that out to your right. If you close above that in about 11 minutes or so, then we'd utilize that as inversion. Currently, it's still a SIBI, so I can't put that as an inversion just yet. What did we drop down into? 15-minute bullish fair value gap there. Again, the main focus, especially with tape reading, is to reside that feeling of fear missing out. Most of you in a live environment, you keep asking, how do I stop myself from, FOMOing into positions? Because you've never sat through a live condition, a live market without ever pushing a button. You've never had the discipline to sit there and say, all right, I'm not doing anything. You want to practice that. You want to practice that skill set, then sit through a live environment and don't do anything. It is a liberating, freeing feeling when I can sit here and be like, you know what, I'm not doing anything. I'm in control. I don't have to fear missing these things because I know the market repeats. I know I have a whole week ahead of me. I understand the conditions that I'm in, and I would elect to do nothing. Does that not sound liberating? Does that not sound freeing to you? Like, man, I don't have to do anything today. Regardless of what price does, I don't have to feel any type of way about it. Like, to me, that sounds like a day off to me, man. If I was looking at a 9-to-5 schedule, it's like, oh, cool, I got a day off today. I don't have to do anything. But fortunately with us, I get to still go to work, but I don't have to do anything. It's like, going to work, not doing anything, but I still get paid. No position is a position. I hope you understand that. There's a great power. Catch me if I'm rambling. I'm a little amped up on coffee this morning. No, Andreas. No, I'm not. Again, as I've discussed, it's a liberating feeling, is it not? Would you want to be part of this opening range? Guarantee a lot of people got caught trying to fucking, excuse my language. I told you I'm amped up. Got caught, you know, running with this high here. Everything from the left side of the curve out extend out. So on the 5-minute time frame, you see that SIBI there that would now be an inversion. Well, I mean, just looking at basic market structure. Again, we're just tape reading. What do we do? You're printing higher highs and higher lows. So if I see that price is respecting bullish PD raise, we're in a bullish market structure. What am I looking at? I'm looking at any buy side that's above us. Okay, buy side's here. So I would hold out for the idea that price would want to gravitate towards the buy side. And again, anything I say in here today, if I'm printing something, if I'm putting something on the chart, I'm saying look here, it does not mean to do anything. For those who are looking for signals or looking for some type of idea, like I'm wink wink, that's what Ict said, you know, I'm not doing anything. This is not a, you know, a hidden message to any of you. It's just simply me tape reading. And I want you all to understand what I'm doing here. Because you need to be doing this at times as well, when you understand that, you know, times are not extremely favorable for me. It's a Monday, no news driver events. I've already gone over this. I'm not going to be a broken record. But I do want to reiterate for the people who are joining. So this previous dealing range, from that low up to that high, what do? We drop down into a discount, into the inversion here, then price expanded. 15-minute time frame, that's the parent for value gap there. What are the, look to your left, what are those down close candles? That would be your bullish order block. Yeah, exactly. That's what people think, Nico. It's like, I'm not stating any of that. And then you go back into a 1-minute time frame, you see, all right, what is price doing? What do we do? Right from the open, price expanded higher. Drop down lower. I mean, we kind of drew past this inefficiency, which if I was to be trading in a live environment, I wouldn't love that. Regardless, you guys know in a live environment, I wouldn't be doing anything because the time's not set. Think about the movement that we just had. Think about the time. Think about what just happened. A Monday, the start of the week, right off the open. What are people so eager to do? Push a button, be engaged. I want to do something. I want to do something. I want that dopamine spike. All right, cool. I'll give you it. Right from the open, boom, price jumps. People are chasing this, going, oh my gosh, I'm going to miss it. I'm going to miss it. You have to think in terms of a retail mindset person. Yes, we're all retail. I've stated this before. We're all retail because we're just a small little fish in a giant sea. But when I'm just looking at the paradigm between smart money and dumb money, per se quotation, I'm just trying to think what those people would be thinking. It's a lot of emotions. They think in emotions. It's not even thinking. It's just reacting in emotions. And price will show you that. So, and here we took out buy side as well. Think about how difficult this would be to be trading in. This would not be fun. I don't want to be inside of this. It's the exact reason what I stated from the beginning of the video why I wouldn't want to be doing anything. Regardless of what price does, it protects me. Can you please explain to me how I set this session indicator? Well, you're going to set it. It's not going to be down here. You have to go over. It's going to go 3 lines. You're going to go to move to existing panel below. So put the sessions indicator on, and then you'll have to move it below. Did I pay for all those core content essence? Yes, I did. Again, if you're just tuning in, I appreciate it if you like the video. It just takes a couple seconds. Okay, it's the only thing I ask during these live streams is just like the video, subscribe. There's plenty of you that aren't subscribed, so make sure you are. I forgot to put on here. So we have a old new week opening gap up here, and then this is our current new week opening gap down here, this neon shaded area. Very small in range. I mean, it still can be utilized, but it's not going to be utilized as much as like a larger range new week opening gap. Thank you, Accidental. I do appreciate it. I know you do. So that makes sense to everybody? We're on the same page. You understanding what I'm saying today? I know I've kind of gone on a little tangent, but overall, I think you get the gist of what I'm saying. Should be a very liberating feeling. It should be like, cool, man, I don't have to do anything. All I have to do is tape read. I just have to look at price and see, like, all right, is it going from here to here? If I get it wrong, it means nothing to me. If I get it right, it means nothing to me. It's just simply a practice of pattern recognition. That's all it is. JL, I mean, it's just something to remind me of what the daily candlestick is looking like. If I'm in a long and I see that the high of the day, the current high of the day is here, right? I'm looking at it, I'm looking at the daily candlestick, I'm saying, all right, well, the current high of the day is here, and I'm just seeing how price could get above it. To be honest with you, I forget it's even there. Like, people ask me about this indicator every single day, but to be honest with you, I don't even really look at it. It's just something that if I peek at it and I remember that it's even there, then I'll utilize it, but more or less it's just something to put on the chart. I mean, the 1 hour candlestick does have some usage. I've talked about this before, where if I'm trading the silver bullet, you have 1 hour of time, right? So the only thing that you can really utilize is, not the only thing, but something that would be important is a 1 hour singular candlestick, right? If I'm trading the silver bullet, the only thing that is happening is 1 hour time. So if I was to utilize this 1 hour candlestick, how would I utilize it? Go back to core content. We're utilizing power of 3. Open, high, low, and close. So if I'm expecting a bullish silver bullet, I'm expecting, 1 hour, the singular candle, to be a bullish candle. What would I be expecting? Well, I would expect the open to look like this, obviously, wherever it opens. Then I'd be expecting what? Some manipulation to the downside. You have open, you'd be setting the low. So if I was to look at this 1 hour singular candlestick, I'd be looking at the open going, okay, if I'm expecting a bullish candlestick, then I would expect the lower prices first, and then I'd expect price to move above the opening price of that candle. Ideally, I'd be one positioned before or beneath the opening candlestick, right? And then I'd want price to expand above the open and continue on higher, and then wherever we close out, whether it's here or wherever, if you're just looking at a bar chart, this is what price would look like. Open, low, high, close. So when I'm looking at silver bullet, I'm looking at that 1 hour candlestick. That's how I'm utilizing it. It's not always picture perfect in what, I just described, but that can be a pattern that you can look for. Exactly, Nico. I'm very liberated. I get satisfaction and dopamine watching other people suffer in environments that I already knew not to be a part of. It's very liberating. And it's liberating not because I'm watching other people suffer in it, because I know my younger, dumber self, less informed self, would be inside of here trying to arm wrestle, trying to do anything. It's a very freeing feeling. It's the only thing I can describe. And it's like, oh, well, CJ, how do I become profitable? What's that clicking moment for you, man? What's that moment? The moment that I understood how to be profitable is the conditions I should not be trading in. It's the moment that I said, you know what, man, I'm done pushing in stupid low probability environments. CJ, how do I become profitable? Well, I can tell you what, it's not going to be watching a 10-minute, 15-minute ICT video on YouTube on a 90% win rate. You're going to find your probability in the times when you should not be trading in. You're going to find it when you should not be doing anything at all. That's the times that you are going to become profitable. Because those are the times that you're saving yourself those unnecessary, stupid losses. Imagine if you're able to wipe away all the dumb losses. Not the losses that are part of your model, but the losses that are unnecessary. You're probably saving yourself a bunch of capital, a bunch of mental capital, and you're helping yourself. You're saving so much money and time. That's all I'm trying to do throughout these live streams. I'm trying to give you that advice. I'm trying to give you that experience so you can fast forward your learning curve. If you don't take any of the advice, you don't take anything I'm saying, then it's useless. It's just, why the hell are you here? I want a signal. I want to pass my funded challenge today. Well, congratulations. You're probably going to fail to fund it anyways, so it doesn't mean anything. Sorry if I'm a little bit harsh today, but it's the way it is. I don't sugarcoat shit. It's fine, Trader Tom. That means no difference to me. Really? Nico, I think you gave me another piece of advice. Wait, middle click. Oh. People are teaching me things, man. Somebody last week told me about visibility, which I still have to get used to. But this is a very useful tool. So I feel like I'm old. Like, you guys are the newer generation. I've been on TradingView for years, but I don't learn any of the new stuff. Exactly, Tom. Yeah, I mean, passing a funded challenge means absolutely nothing. So again, would you be very fond of trading in a condition like today so far? I know I wouldn't. All of these are already set out from what we talked about last night in the weekly forecast. We talk about the economic calendar. We look at the economic calendar, and then we match it with price. All right, no news driver events. Cool. Looking at price, not clear. Low probability. Okay, both meet my criteria to do nothing today. So if you're wondering how to get that formula, that's basically it. So what have we seen from the opening range? We've taken out buy-side liquidity. We dropped lower. We utilize this inversion fair value gap, and price is drifting off lower. And if you feel any type of way about missing moves on a day where, again, you've already predetermined that you're tape reading or doing anything, then obviously you have more maturity. You have more time to do, more time to be forged in the fire. Really, per se, you don't have that experience to be content with just doing nothing. It's very, very important to get to that feeling of not fearing of missing moves. If you still fear missing moves, especially in tape reading, you're not mature enough. You're not ready. I can tell you that confidently. Because how are you going to be able to control yourself in a live environment when you've given yourself the permission to trade? You do not have the patience to sit still. If you guys are just joining in, I see we're about 500 viewers. If you can like the video, I'd appreciate it. What's up, Jack? Thank you for letting me know about the RTH gap. So yeah, there's a lot going on here. I'll just delete this. As far as the RTH gap, I'll go down to 1 minute so you can see it. It's actually from this opening price here. But as far as what was left since price opened from that first 1 minute, it was this last kind of portion here. So price fully closed in that RTH gap. If we move beneath it, you're wondering, okay, well, how did I utilize RTH gap? Well, you can utilize it in a few ways. Utilize it for a draw on liquidity, especially if it aligns with your bias. But if price gets underneath it and you continuously look for lower prices, like example today, if you extended out that RTH gap, price got underneath it today, then you can utilize it as one big inversion fair value gap. That's the way you can visualize it. If you have already a multiplier, a pattern inside of the RTH gap with a bearish bias today, or whatever it ends up doing, then you can utilize that as confluence. It's like just an extra padding to whatever you're already looking at. What are the settings for ICT higher time frame? This is it. It's the last time I'm going to do it. I'm not going to ever do this again. I have one candlestick. LED, hey man, I just joined. What's your thoughts on today for what I see? It's Monday, new news. Again, yeah, I'm just tape reading today. I discussed this 100 times already. I know you just joined, but I don't want to reiterate. People are probably going to get upset. It's like a broken record already. Again, being in this state of mind where I'm just tape reading, I'm just watching price, it's cool. So what did we do from here? We've taken out buy side or sell side liquidity, but we've taken out what? Both sides of the board. We've taken out buy side, we've taken out sell side. There's S&T at the lows, yes, but when you're in an unclear state of where price should move overall, and you're wiping both sides of the board, irregardless if I was to be trading today, right now I would be like, God, I don't want to do anything. Why? Because it's indicating a seek and destroy profile. What have we done? We've violated this structure of price in here. If you're just going back to basic market structure, basic one-on-one trading, is you're looking at what? Higher highs and higher lows. What is this market structure here? Well, we violated the high here, and we violated the low there. So is price in an uptrend or is it in a downtrend? It's neither. Does that make sense of what a seek and destroy profile is? Is you're violating this bullish, whatever the market structure is, you're violating that entire structure. It wasn't a bullish market structure, but now we've taken out the high. We dropped the lower, so got the low. So what structure is it in? Is it neither? It's neutral. Trying to pick a side in here and trying to arm wrestle the market does nothing. You trying to be a smart guy and like, oh man, I know what price is doing. We just took out the lows, bullish S&T, we're going higher. All right, cool, have fun in that. Same thing vice versa. You try to short this. I mean, yeah. These type of conditions, when you're looking at it, are things that are going to make you money. It's boring. It's not fun. It's not an entry pattern. It's not a 90% win rate. But these are what's going to make you money, because it's saving you capital. It's saving your ass. Like if you don't have a notepad out, and you're especially a newer trader, and you're not journaling these little subtle things I mentioned over passing and mentioned over time, then you're just doing yourself a disservice. I don't know why you're on here. It's not a Netflix show. It's not a movie. You're not just going to sit here and just retain this information. You don't remember like 90% of the things you listen to. So writing them down is very important. Ingraining it into your head. Going back into your journal. Typing out what I said. Typing out the notes that you already put down. Like everything that IC has ever talked about, I took a notepad and a pen and I journaled it all. And then I put it into whatever journaling process I already had. I'd screenshot the day. I'd go over what price did. Like, if you want to ask about work ethic, you want to ask about how did you get to this point, it's working your ass off every single day. Doing the nonchalant, boring shit over and over again. You should make a video on that. I don't know what you're talking about. Yeah, I should, Nico. How would you approach a funded account? Well, it depends what you're going for, whether it's futures or foreign exchange prop firms. Yes, I look at dollar index. Futures. So for futures, to be honest with you, this is what I would do. This is what I did. If you have capital to spend, this is what I would do personally. It's not a advice. A lot of you are going to take this incorrectly and hurt yourself. But this is what I would do. I'd be over leveraging on the challenge. Why? Because challenges don't really mean anything, to me at least. If you know with data that you can go into a live environment and you have a track record where, all right, I'm able to lower my risk, I'm able to keep consistent profits, consistent contracts over and over again, you'll be fine in a live environment once you reach funded. For me, I'd rather over leverage on the challenge account, whatever you want to call it, gambling, not to an absurd amount, not to where you're blowing it out in one trade, but give yourself a few trades to, obviously if you end up blowing it, then just reset it. Futures are very low cost compared to foreign exchange. That's the reason why I'm recommending it. But over leveraging on those type of things get you past that challenge account, right? because it's just a lot of time spent. It's a net negative overall. You're losing money, you're losing time. So if you're able to get through it quickly, that's, you know, the best case scenario. You're able to get through the challenge account quickly. Once you move it into the funded, you're moving to a point where you have very low leverage, you have very low risk, and you're building up that drawdown. You're building up that buffer until you can move away from that starting movement or the starting balance. And once you do that, then you can start adding on to it, and that's when you can start pulling out, you know, making payouts. Like I'm at that point now in this account with the 100,000 is the drawdown overall was 3K. I'm at 3,200 in profit. I'm not going to pull out and make a payout right now. That's to me, I built up the drawdown now to where I'm at 3K in profit, and now I can start moving away from it. Once I get into 5K profit, 6K profit, all right, I can start upping my contracts. I can start upping that. That can get to 7K, 9K, 10K. And at that point in time, especially in my funded futures, you can move into what they call an actual live account. Like if you prove to these, you know, prop firms you're a good trader, they're going to move you into a live account. They're going to give you access to more capital, those type of things. So that would be my advice. That's what I'd be looking at. Am I worried about a prop firm not paying me out? I mean, yes, but I think pulling out, you know, $500 or $1,000, you know, when you haven't built up a drawdown, it's just you're hurting yourself. It's going to set yourself back. You're giving yourself less drawdown, less wiggle room. I'd rather just build up the buffer and then move away from it, because as soon as you get above that buffer, like 103,000 where I'm at now, then I can start upping my contracts. Like once I get into 5K, 6K, 10K, I mean, then I can start using some real good contracts. I mean, I can start getting into where I'm making $2,000, $4,000, $5,000 a day, like easily. But when you're at those lower thresholds, you got to lower your contract size, using micros, building it. Hope that makes sense, Tom. Due to language barriers, sometimes I need to watch your live and repeat. Love from India. Yeah. Love from the USA. I'm sorry, there's a language barrier, but there you go, Jake. Here's your breaker. And I'm not interested in anything today. I don't see the reason to push price, do anything with price. If you are looking at the 1 hour, you have this area reclaimed. Actually, I can just do this. Wait. There we go. What's that resting inside of? From the stealing range high down to the low. It's resting inside of a premium. What's this pattern here? That's a breaker pattern. So what are you going to mark out? This down close candle, all of these consecutive down close candles, that's your bull or your bearish breaker. So you'd extend that out in time. To your right, you have a premium reclaimed fair value gap. You have a premium bearish breaker. Price moved up into a premium. Now we're seeing a drop off lower. What do we do on a 1 minute time frame? Inside of that breaker, inside of that fair value gap, you've taken out buy side liquidity. You dropped lower, utilize inversion, dropped lower. Now we're kind of just meandering around. What's this pattern here? Same thing we just went over in a more fractal price. This, that's a bearish breaker. Again, I'm not saying to utilize anything I'm saying today is a signal. It's not a wink wink type of thing. It's me just tape reading, watching price. Same thing here, 30-minute time frame, you extend out any areas of inefficiencies on the left side of the curve, you extend it out to your right. So reclaimed area, 15-minute time frame, I think that's where it's the clearest currently. So at this point in time, knowing that 1 hour order flow, understanding what we've done here, we've taken out buy side, look at the 15-minute reclaimed, look at the bodies, even though we wicked above it, whereas the body's respecting it. It's the parent time frame, so like a 1 minute, a 5 minute. dropped lower underneath this fair value gap, turned into a inversion. Price opened, came back up into it, dropped lower. Now we're resting inside of this. If we drop beneath it, close beneath it, it would turn into inversion. And then we'd see, all right, does price want to gravitate towards the sell side? Let me check the chat here. Does it? My fund futures have a trailing max drawdown like Top Step. I mean, it has a end of day drawdown. It depends on the plan that you choose. But yes, it's end of day. It's not intraday. It's not. Theirs is terrible. I don't know how anybody could actually be profitable with that. How would you manage your funded account after your first withdrawal? I mean, preferably I want to keep it above that threshold. Like if I'm sitting at 103, I want to be withdrawing anything above that. So I want to keep it above that. That way I can keep it at that. Preferably I know what my plan is. I've already talked with them. Again, if you're a profitable trader, you have somebody who has a good track record, and you can just prove this to, especially a prop firm, they're going to end up giving you more access to capital. Like, no prop firm is going to see you trading for 6 months consistently with the same leverage or slightly increasing, doing the same amount of trades, same thing, same amount of time, consistency, all across the board. They're going to end up contacting you. Like, I guarantee it. But most people don't reach that stage because obviously it's too difficult. Can you not also pass another challenge and use a trade copier? Yeah, most definitely. But I think that most people, they can't even pass one challenge, and they can't even... People think that they can just trade copy 20 accounts. It's like, dude, you can't even get to the funded stage account, and you can't even keep the funded account. What makes you think that you could do 10 accounts? I mean, you're out of your mind. Like, get good at one account. Go to one account, get funded, build that up, get a payout, prove to yourself you can trade. And once you do that, that may be going to the trade copying thing. Like, that's the way I would look at it. In this industry, you always think that you're better than what you actually are. And you have to humble yourself, because you really aren't. And I'm just being honest, because it's going to help you. If you come from a point of you think you're better than what you are, I mean, it's never going to help you. Digital nomad, awesome. If I was just starting out, I mean, again, if I was to do a funded account, I would have already had to go through tape reading, what I'm doing here today, where you're not even executing on a paper trading account. You're just tape reading. You're just looking at price. You're marking up areas of inefficiencies. You're getting your pattern recognition down. Once you get that down, then you move into a paper trading demo account, and you start recording it. You start taking it serious. You start seeing, all right, can I get consistency at this? Can I build a foundation with it? Once you do that for at least 3 months, then I would move into like a 50K starter account, wherever you want to call it, and you see if you can do that. If you can do that, move into a funded, and then just baby step it, walk it, and see if you can get a payout. If you can do that, then just start building up, other accounts, trade copying, and then pushing all that money. Remember, the whole main point of these funding companies is take all that money and put that into a live account. If you were to start off, would you start with smaller challenges? Yeah, I mean, I just answered that. Again, Ray, that's a flawed mindset. Like what we just discussed. If you know how to trade, no reason to do the smaller accounts. That's the preconceived mind of the overconfident mind. Is, oh, I know how to trade. I've been doing this paper trading, tape reading thing. I know what I'm doing. You have no idea what you're doing. Your mind, you're so overconfident. And I don't know your personal journey. I don't know. I'm not stating at you, but giving that advice to a newer trader makes no sense. I use Quantower. So Quantower has got a free trade copier built into it. Why do I choose my funded futures over Apex and Top Step? Few bullet points. Price, Apex. They have a 90% off sale, but then you're paying a activation fee. Look at my funded futures. They include the activation fee, which ends up being cheaper. So all these people, they're buying 20 accounts, that are 90% off. If they pass them all, you're paying like $2-3 grand in activation fees. So that's point A. Point B, my funded futures says the end of day drawdown. It's not intraday unrealized profit like Apex, which I don't know how anybody can actually be profitable with that, but hats off to you. I think the support system, I think their structure, their layout, their payout system on my fund futures is better than Apex and Top Step tenfold. I mean, just go through it, compare the two. I'm not going to be a salesman, but it's just the truth. A funded account, like I have a sim right now, a sim funded account. It's like, you know, they're giving you demo money, but actually you're making money on it. And once you move into a live account, that's real live money. I mean, there's really basically, for you as a trader, it really makes no difference. I mean, with the live and actual live account, you may get access to more drawdown and probably a little bit more contract sizes. But like currently, prop firms are either going to A book you or they're going to B book you, especially if you're on a sim funded account. They're going to A book you or B book you, meaning they're going to copy you or they're going to oppositely trade you. My fund at FX and my fund be a bunch of scammers. That statement's hilarious. Like, where's your evidence for it? There's no evidence for it. It's just somebody sees something on Twitter. They don't like somebody's personality, and they just state that. So, yeah, it's all your own personal opinions. Do your own research. Do your own due diligence. I've never had an issue with them. So, the inner circle trader. Mark up to 1 minute for value gap. Like, dude, it means nothing. People, it's the reason why if you looked at his Twitter, probably so many people lost so much money because they took every single tweet so literal. Like, over the years spent with him, all that is saying is what we're doing here. Is you're looking at area of inefficiencies or you're looking at area of interest and you're marking it up and you're saying, all right, how does it trade from it, away from it, to and through it? That's all you're doing. It means nothing. Contact and support. Again, I don't trade Forex for that particular reason. Forex is, it's going to have very inconsistent things. Again, I don't deal with the business of that side, so I'm not going to speak on it. Yeah, I know, but again, it's useless. What does that do for any of us here? It's not a signal to do anything. There's a lot of questions over this funded future stuff. I mean, just go to the page, man. Go to the page. I'm not a support bot, man. Like, I recommend them, I support them, I utilize them. Just go to the page, look at the FAQs, and seek the answers for yourself. I may be too harsh for some people. I generally don't care. Like, it's a lot of just give me answers. I don't want to do the work. I mean, this just go straight back out to trading, man. Like, they have a support bot on their page, so you can just click on it. And here, again, I apologize for not reading prices. Just so many questions, but I mean, would I be trying to do anything if I was to place myself in a live environment and be like, all right, I have to take a trade today, or at least that's a mindset. Obviously, today we're just tape reading, we're not doing anything, but overall, no. This is a very classic signature in price where you're in a seek and destroy indecisive price. We've taken out buy side, we've taken out sell side, and what are we doing? We're returning right back into the equilibrium of the range. So from that dealing range high down to the low, what are we doing? We're smack dab right in the middle of the equilibrium. So if you're ever doing that where you're taking out both sides of the board and then you're returning to EQ, trying to make a decision at the EQ is the lowest probability thing you could possibly do out of the entire move. Why? Because it can go both ways. I could easily see this thing going higher. I could easily see it going lower. So that's what you need to be doing is a tape reading, is going step by step. If you're by yourself, you're not on a live stream, is you're making small annotations and you're recording it, you're screenshotting it. I'd probably recommend just recording the session overall because it's going to be a lot less work. So just get a video recorder and record the things that either you're saying out loud, like me in here. I think that's the easiest way. I don't personally like to do a bunch of like physical annotations because it's a little bit too fast, like prices moving too quickly. So if I just talk about it, it'd be easier. So in here, what I'd be telling myself is, all right, well, we've taken out buy side, we've taken out sell side, we've returned to the EQ, the range. At that moment in time, you can make any decision. Price could be going higher, it could be going lower. Even at this point is, well, we have sell side beneath us, there's a fair value gap in here. So some people could be seeing this as a long, right? Some people would be looking at this going, okay, well, I could go long in here, but understanding the conditions that we're in, I wouldn't want to do anything. And you'd just be telling yourself, like, okay, if price moves away from it, it means nothing to me. There's no emotions behind it. This is what tape reading is. You mark up an area, okay, how did price react off of it? And just step by step, minute by minute, tick by tick, you're just annotating price. So there's buy side above us, sell side beneath us. We're going to see which one it wants to trade to first. So basically roll the dice. Flip of the coin, which way do you think it's going to go? Let me see if I have a coin somewhere near me. And we'll do that. Let me see. Oh, I have a penny. All right. So I have a penny. I have heads. Heads is going to be buy side. Tails is going to be sell side. I'm going to flip it. Hopefully you guys can hear it. All right. Tails. Sell side. It's basically what we're doing in here, right? That's what price... basically what you're doing is you're just flipping a coin. Like, it's called gambling, right? I'm just trying to draw the example or the analogy of what price is doing in here. It's like flipping a coin. Flip sounded break. So you have another small fair value gap in here. Black check Monday, yeah. And if you were like on a tape reading day where you're mature enough to understand that you're just kind of having fun with paper trading, I would do it in here, but people would take it a literal as a signal, so I don't want to do it. But in here, what I would be doing is, all right, I'd be just putting a paper trading short on to see how the short would work. Right, I'd just place it in the fair value gap. I'd see, all right, this is a move away from it. I'd place a buy down here. I'd see how price reacts away from it. Those type of things, just practicing like how price moves away from inefficiencies. So again, would you want to be a part of any of this? Like, I hope many of you aren't not participating in this, but I'm sure there are. Me personally, no, I wouldn't. It's not something I'd want to be doing. We are 600 people here, and this stream has less than 300 likes. Thanks, CJ. Thank you. I appreciate it. I know some people just forget, and I get it. I mean, but I would appreciate if you guys can just take a second, like the video, if it is helping you. I mean, I'm sure if you're here, it is helping you in some way, shape, or form. Just looking at the 5-minute order flow, tape reading. Again, what do? We took out buy side there. This is the 15-minute inefficiency. Look at the bodies. So I'm annotating the CE of this bearish order block, the wick of it. So there's the body's here. What I'm doing is I'm annotating the wick, CE specifically. P-Trader or Peter Trader, thank you. Hello, are you just marking up inefficiencies on 15 in 1 minute? Yep. I mean, for the most part, if you've seen, I use every single time frame. But in a session, what I'm doing is I'm mainly marking up a 15, a 5 minute, 1 minute. Those are the 3 time frames I'm constantly referring to and I'm constantly utilizing. Those are the ones that are moving, right, the most. Those have the least amount of time. But if you've been here long enough, you see me, I'll flicker through the 1 hour, the 4 hour, the daily, the weekly, all throughout a session. I never abandon these time frames ever. I'm constantly referring to it. I'm constantly looking back through it. Even through a complete session, even though I'm on a 1 minute, I can still look at a weekly and gain information from it. How is the candle moving? What's the closure like? If I was bearish on the day and I go out to a daily time frame, how am I utilizing that? Well, let's say today I'm looking at this 1 minute. I'm going, all right, well, I want to look for lower prices. Then I'm looking at the daily and I'm just visualizing, okay, well, how would it look? How would it end up looking like? Well, we would see that it would want to trade lower into this inefficiency here. If I was looking at it through a bullish lens, a bullish view, then I would see, all right, well, price on the daily time frame has stabbed into this inefficiency and it's moving away from it. So I'd be looking at a daily time frame, what's above me? What can price look for? What can it reach for? If you get so focused on a 1 minute time frame, that's the reason why you're making mistakes. That's the reason why I have multiple monitors. Even on one monitor, I have it split like this, where I have 2 charts open at once, and I'm looking at every single time frame. I'm looking at it all. I'm constantly looking at the closures. I'm looking at where price is traded to, from, where the inefficiency's at, what is it respecting, what is it not respecting. So hopefully you guys are doing that in your own trading. You've caught on to what I've done, and hopefully it is transferred over to you. Because if you're not, it's a habit, right? If you have a habit of only staying on a 1 minute, then of course you're only going to do that. But I have a habit of doing that over and over again. Just looking at all these different time frames. I'm looking at different things. It's a very common theme is people get stuck on a 1 minute. That's the reason why I have solely I'll leave the 1 minute up, but I'm flickering on this this chart here over and over again. I'm treating my favorite trading account like it's real, so can't mess with it. Yeah, great. Then the only thing you're doing today is what I'm doing in here is just I'm just tape reading, right? Just marking out areas of inefficiencies, seeing how price is trading to and from it. If I was forced to be in here, it was like, somebody had a gun in my head, said, you had to be profitable today or, something happens. Well, I probably wouldn't. It would be near impossible to do so. I would be trying to short, I'd be trying to long, I'd be trying to do anything. And these things are easy to predict. It's not like it's mysterious, like Enigma, like I don't know when not to trade. We've already known this since yesterday, since I've done the weekly forecast. I wasn't going to be trading today. Before all this unfolded, how did I know this was going to happen? How did I know price was going to be very low probability? Well, if you look at price in general, and you match the economic calendar, it's telling me this. You match what happened last week, we had 2 very large expansion range days on Thursday and Friday. Price moved almost 800 handles in 2 days. What do large range expansion days lead to? Typically small range days. So I'm anticipating on a Monday with no economic news driver events, after 2 large range days, it's probably going to be lower probability. Ding ding, there's a gem there if you didn't get it. Do you ever take trades on a Monday? Yes, I do. But if price is not aligning and the economic news driver event calendar is not aligning, then no. But if I'm on an FP week or CPI, FOMC, I probably am looking at a Monday as a more high probability time. There's profiles to when Mondays can be better. So we've moved above these, right? So what do these become? These become inversion. Since we've closed above them, they now become an inversion. So all you'd be doing as your tape reading is you'd be changing these. That's why I changed them from red to orange. All my inversions become orange. All my, the BISIs are blue, SIBIs are red, Once it becomes inversion, I change it to orange. So what I'd be doing in here is if I had a recording, or, like I'm doing now by myself, I'd say, all right, well, I want to see how price reacts to this. We've moved higher. We've taken out south side. There's some SMT at the lows in here. I want to see, all right, well, can price react off of this? Look at the 5 minute. This would be the parent. We have a bullish order block in here. So I'm marking out the high, and even you can mark out the CE in here. Can price react off of this? And then can I target, if I'm looking at even a 15-minute time frame, if I have a very large wick like this wick, then I'm looking at, can we target the CE of that wick as my first objective. If we can get up above to and through the CE of that wick, then I'm going to be looking at the high of it. So, I mean, you can put this on any time frame, but if you have a large wick, it's above or beneath price, look at the CE of it. Wicks will act as gaps. So just imagine there's a fair value gap sitting there. So I'm looking at the CE and I'm looking at the top here. So if price can reach the CE, doesn't stall, keeps moving through it, then I'm looking at the buy side above it. I used to only look at the buy side above here, and then price would reach the CE of it, it would stall, collapse, and I'd be wondering why that is. Well, I'm not paying attention to that. Marco, exactly. Again, I mean, it's a common theme. Marco said, I know you see me a lot, and I know I ask a lot of questions, but I've been trying to listen more because you answer my questions without asking. Yes, that will happen a lot, even with ICT. Like, there's plenty of questions I've had, I just never asked them, and then over time they got answered. Like, majority of the time, that's going to happen. So from here, you see what we did here. I said, all right, can price utilize this inversion to gravitate higher? What do? We drop down into the inversion. We're gravitating higher. Can price expand into the buy side here, and can it expand into the buy side above that wick? So where's this buy side? Basically right at the CE of that wick in here. So I'm lining up the 1 minute with a 15 minute. Let's go down to a 5 minute. What do we utilize here? We utilize the 5 minute bullish order block. So even though there's not a fair value gap or something here, I'm utilizing the PD array that's near. What did price do here? Reacted off the bullish order block there. I saw your Bree. Yeah, for the most part, I'm only executing on a 1 minute. But people think that since I say that, I'm only utilizing 1 minute. No, I'm utilizing everything. ICT 1 long, I mean, good, great, man. Yeah. Once you reach this liberating point where I don't care what anybody else is doing, I don't care what they're doing, I don't care what ICT is doing, it means nothing to me. I had a rule set and a agenda for the day where I was tape reading. I'm doing nothing. I'm not going to deviate because somebody else is doing something, even my own mentor. Even though I can see that we're probably going to go towards the buy side, my discipline, my rules, my agenda, I set out for the day was to tape read. I'm not going to go back on my word. I'm not going to backtrack. This is what I said. So, man, you have to be a man of your word and do what you said. If you say something and then you don't do it, you're breaking discipline. You're breaking rules. I anticipated the chat today, too, to be a little out there, especially because I'm not trading. And I already knew it. The chat, it's so funny when you look at human psychology, and then I look at the chat, and I can look at, like, what the comparison between them is. It's literally hand in hand. Like, anytime price is very indecisive, it's going back and forth, there's no clear direction, it's not easy to see. I mean, I can look at the chat, and I can see, okay, I'm going long, okay, I'm going short, okay, price, like, I'm just going to use this as an example. But somebody said, there's a 4-hour bearish breaker, that's why I closed. And then somebody just said I went long. Like, it is hilarious to look at the human psychology, especially within my own chat. Like, when I see chat like that where it's very indecisive, it's like, all right, cool, I'm doing the right thing by doing nothing. Because people are getting burnt. Which, again, I know there's plenty of people, probably hundreds of people who've never even typed a message in this chat, which is completely fine. And you're sitting here, you're learning, you're doing the right thing. Which, give yourself a pat on the back. Congratulations. Yeah, Nico, I mean, that just becomes experience. I also know that. I'm trading my own plan. I'm trading what I believe is going to happen. So this is a old new week opening gap in here. Just watch how it trades, you know, to it, through it, if it utilizes the support, or if we hit it, does it reject it? So what do we print in here? If price is closing above, this would become a bullish order block. So what do we do here? We got above the buy side, utilized a bullish order block here. We're getting above the CE of the wick of the, remember the 15-minute time frame, getting above that. What is this SIBI here, this red line? If you go back out to your 15-minute time frame, look to the left of you, that's this reclaimed SIBI. So if I go back down, how would I utilize that on a 5-minute? Well, if price closes above it, then I can utilize that as an inversion area, right? See the reaction off of the CE of the wick? That's why I'm annotated. So in here, what's this down close candle? That would be your bullish order block. So what would you mark up? You'd mark out the high there, and you'd mark out the mean threshold. So about 50% of that down close candle. And you want to see, all right, again, look at, that's the reason why I have old new week opening gaps on. Look at the reaction off of the old new week opening gap. Does that mean that's bearish? No, it's just a reaction off of it. Could just be a slight retracement in order for price to go higher. This is what tape reading is. It's very important that you're doing these things. You're annotating it, you're marking it up. So from here, if I'm looking at this, if I'm tape reading, I'm saying, all right, well, from here, I wouldn't really want to see price trade through the 1-minute order block in here. If we're going to maintain upside, if we're going to maintain higher prices, it would have to respect this bullish order block. Why? Because there's no other areas bullish, inefficiencies beneath price that price would need to reach back down into. All that would be telling me is that price is going into consolidation, and we've already been in seek and destroy. I mean, look at the delivery of price. This is not clean. This is not something I would love to be a part of. Wolf, I have a question. I've stopped many of F. I don't know if that's a misspell of IFEG. Could you help me on this? I'm not sure what that question means. If you can reword it, I can maybe answer it. Anthony, you have unlimited time, but each month, if you don't pass the or you don't hit the profit target, then you will just pay the monthly fee. Do you explain one more time what's a bullish order block? I mean, it's a down close candle after price closed above it. It's as simple as I can make it. Again, if we were to trade through that, that would indicate to me that it's probably not. It's not going to want to reach for the buy side. Yes, yes, there's a 2022 model, but some of the words, I try my best. When people ask that question, like, isn't there a 2022 model? Isn't there this? Isn't there that? I try to, what I'm receiving from my end is, shouldn't we have taken that? That's basically what I'm getting, like, from the information. I know you may not mean that, so I try to, like, not emphasize the word, but I try to relate it. Yes, there's a 2022 model, but to me in here, that's not a high probability model due to the conditions that we're in. So hopefully you do understand that. Because if I said, yeah, this is 2022, then you should have been a part of that. It's like, well, people are going to feel like they're missing out. But if been here the whole stream, you understand that what we're doing is tape reading. I don't feel any type of emotion about this. I feel like I can't describe it any other way. Like if somebody was like, man, I caught this long in here. It's like, well, great. I feel nothing. Like I don't know how else to put it. Yeah, Andreas says this again. I have no opinion. I generally don't care what you do. Like, it's your decisions. You know whether that was a bad idea or a good idea. I've told you that you can line up with what I'm thinking and what I'm doing today. You can line up with whatever you think I would be thinking. Obviously, I'm not doing anything in here, so doing anything today would be a stupid idea to me. So, if you're looking for criticism, I'd call you stupid. If that's what you're looking for. So just currently looking at price. I mean, it's in no man's land, meandering around, doing nothing. Daniel, good to see you in here. Love to see new faces, new chatters. Yeah, hopefully Andreas again. I think, I can't speak for women, but I think men, especially men that actually want to be very highly competitive, I know for myself, I respond to harsh comments, especially for a mentor or somebody. That's the way I get encouraged, personally. I don't really sugarcoat anything because I don't think that motivates anybody. If I tell you you're a dumbass, it should piss you off. If I tell you you're lazy, you're stupid, that doesn't mean that I don't care for you. I don't care that you succeed, but what that is doing is it should piss you off to either want to prove me wrong, that in a good sense, that you should want to prove yourself that you can do the right thing, and it should motivate you to do the right thing. Like, I get motivated by harsh words like that. I don't know why. It's the way I'm programmed. Because if somebody told me, it's okay, man, like, maybe next time you can do it, it was really just some soft shit. I personally don't get motivated by that. That's just personally how I'm hardwired. I think most men, if you're, high testosterone man, you get motivated by that. Again, there's times where, of course, I'll be a little bit softer in the teachings and encouraging and motivating. But if it's something where it's just a stupid mistake, something that you can easily avoid, of course, I'm going to be harsh because that's the way that I'm programmed. It's the way I would learn. Again, I'm not the mentor for everybody. I understand that, but I'm never going to change who I am and how I learn just to appease everybody. And you're never going to be able to do that. As a mentor, as a person, it's never going to happen. Lonus, exactly, yeah. I mean, we're as men, if you've been in the gym or any sports, any teams, like we're very, very harsh with each other, but it's for a particular reason because for the most part, it's how we motivate each other. It's yelling at each other, calling each other, excuse my language, a pussy or bitch, whatever. But it's just for a particular reason. It motivates us. Off that topic, as far as what price is doing in here, if you just look at this dealing range, from this low up to that high, price reached down into a discount. Optimal trade entry there. What's this down close candle? That's a bullish order block. So why did this bullish order block work, quotation, versus that one? Well, this one is inside of a discount. Am I able to predict when price is going to reach down to this discount versus respecting this one? Not necessarily. There's conditions to be had. But when you're in a very lower probability condition, you're going to have a lot of wild, wicked retracements on you. It's harder to keep with price and run with it because it's probably going to have a deeper retracement than you think, especially in a high resistance liquidity run signature type of day. Again, I don't feel any type of way about anybody else entering at a price. And you all, and the reason I'm saying that is because you need to reach that stage of maturity. Like, these other people's trades do not affect your bank account. They do not affect your trading account. when they take losses, are you mad or upset? No, certainly not. So why are you upset when they take a trade and it goes in their direction? I don't understand the correlation between it. Because when they take a loss, you're not sitting there going, damn it, man, why did I not take that? Of course not. Because there's always two sides of the coin. There's always two sides of the story. Focus on your own paper. And I mean that in a literal sense, like if you're taking a test. Like, I'm not looking at the person left of me, right of me. I'm not looking for answers. I'm not looking for anything. If you're a newer student, turn off all your social media. Turn it all off. Find one mentor, find one person. If anything, find two ICT and maybe one other person. And that's it. Turn everything else off. Tune into yourself. You're going to just be looking at everybody else, comparing yourself, doubting yourself. Oh, I'm not making it fast enough. I'm not doing this quick enough. So this person X has been doing this amount of time. I should be doing this. No. We're all on different time scales and on different segments of time. We all have different journeys, so it means nothing. So inefficiency here. You'd want to see this hold at this point in time. Why? Because we've reached down into a discount. We reacted off of this bullish order block in here. At this point, price should hold this fair value gap and reach towards the buy side liquidity pools. Tom, yeah. Hi, bro. Do you know Andrew Tate? Yes, I do. So we want to see it. Can it reach for 1851? Yes, I do. I personally don't. I respect very few people in this industry, especially within this community. I only recommend very few people. My advice is if they don't live trade in front of you, don't trust them. That's my personal advice. If you know how to do this, if you're profitable, you should be able to do it in front of a live audience, as I'm doing right here. Otherwise, I think they're a fake. Or they don't have a track record. But track records, they can also be faked and manipulated. Going back to this idea is, this is the 15-minute fair value gap. We've closed above that. So this would become what? Inversion. So looking at the 1 minute and the 5 minute in here, basically the last line of defense. If this is going to gravitate higher and reach for the buy side, this area should really hold. And this 15-minute inversion. That little area there, you could treat that as an inversion. It's just such a small range where this can go out to even fair value gaps. I mean, if it's small in range and the movement in it, I'm probably not going to utilize it or believe it's high probability. But it is an area where price could wick into it because it's inside of this fair value gap there. Hope you guys have been enjoying today. I know I've been going on a few rants and here and there and whatever, but I just speak from the heart. Whatever I feel like talking about that day is what I'm going to talk about. So what am I going to do here? I'm going to go out to the higher time frames and look at it. Look at the 1 hour, see how it's trading. Because again, you'll forget, okay, man, I forgot that we're inside of this 1 hour area of inefficiency. Like, you'll forget these things. If you don't have it on your chart, for me personally, I have all my things visualized, visibility on that certain time frame. So for me personally, I'd be like, oh, I forgot that price is now trading up into that 1 hour. Okay, let me look at the 4 hour. Let me look at the daily. Let me see how price is trading. So it's the reason why I do that. It's the reason why I go out to these higher time frames to remind myself of what price is doing. Where is it trading? Is it trading inside of it? Where is it moved away from? Those type of things. Rants are the best, yeah. I get it. It's a common theme. I mean, most people love the rants. This personally is, I'm not thinking about anything. It's just coming from the heart, really. So, I mean, if I was looking at this inversion would be the last point of interest. But, So all those people that were upset, oh man, I didn't take that long in here. I feel FOMO. I feel stupid. Do you feel stupid now? I don't. I feel pretty damn smart. I feel extremely smart for not trading any of this. I feel like a genius. Like, that's how I feel. I don't have to suffer through all of this whiplash, this low probability, high resistance liquidity runs. Like, this is just awful. I mean, this is how I view it. It's my opinion, but you could think this is great. But, I mean, this is 6 years of experience telling me this is a low probability. So after a day you buy, this is bullet. I mean, where did I say that? BF. That's a good point. Correct. I've been electing to ignore YM for the most part the last couple of weeks. Just mainly focused on the SFT correlation between ES and NQ. I mean, Ray, that's such a wide question. Again, most of my opinions on bias are going to come from me sitting down basically 15 minutes before the open. Even my bias can change within the open. It could change within 5 minutes of time. So it's hard for me to say. I mean, overall, I don't know. All I know for now is if I had a gun to my head, somebody was telling me you need to make a trade, you need to push, you need to elect to say where price is going, I would say we're going for the buy side here at 1850. That's what I would say. But I don't have a gun to my head, so I don't have to do that. Later, Jack. Yeah. Correct, Tom. Bingo, bango. You hit it on the head. Depends on the conditions that you're in, but you asked the right question. You're understanding what I'm saying is, if price is predisposed to go higher, it's in a fast-paced moving market, conditions are ripe, I can take a trade inside of a premium, like let's say in here, price would be respecting this bullish order block. It would not have these deeper retracements that we're having and having this high resistance back and forth profile. It's the reason why I don't trade these profiles. I can elect to sit out of them and do nothing because I don't want to be a part of this. ESS, it's a good question. So you're probably asking about like this in here. I mean, I'm looking at the order flow. Like since we dropped beneath this, at that point in time, I'm not turning into an inversion expecting a sell off of it because to me, I'm still overall looking for higher prices. But at that point in time, I can't utilize it until we get back above it. Once we get back above it, then I can utilize it just as a basic busy. It's not an inversion. It's just a basic reclaim for back gap, basically. Any areas of inefficiencies, we can always extend out in time. Even if you get beneath it and we get back above it, like we've seen here, price drop beneath it. If it gets back above it, I can still utilize it. It's just not as fresh. It's not as a clean entry. I'm new to your channel. Do you consider a lower FEG could have been a buy? I don't consider it a buy. It just happened. I guess that's the only way I can put it. Today I'm just tape reading, so anything I have on the chart, it means nothing to me. Exactly, Tom. Like, I can get it. You're here every day. You're studying. You're getting it. I know it was morning, but we could play drinking game every time gun his head. Yeah, I know. I say it a lot, but it's for a particular reason. He said I still suffer from non-existing trades. I appreciate the reason. Yeah, of course. Hi, bro. How to start trading? I have a beginner's course, so if you go to the start of the beginner's course, lesson 1, that should help you get on, at least on the right track. So how many of you in here would like to be participating in this today? Like if you really had to participate in something. If you could choose through 5 days, somebody laid out a template for you, said, here's, Monday through Friday. I showed you all the beautiful, like Tuesday and Wednesday, very low resistance, very easy entry patterns. Would you be like, I want to pick this day. This day looks great to me. I want to trade this one. No, you wouldn't. You wouldn't do that. That's the way I visualize the week. I understand, I'm predicting that Tuesday, Wednesday, Thursday, Friday are going to be a lot more clean than this. So in my head, I'm laying out like somebody laid out a piece of paper on my table and said, all right, pick between these days. Which ones would you want to choose? It's like, okay, well, I'm going to pick the day that's really clean. I want to pick that one. Do I know exactly when that's going to happen? No, but I probably have a decent idea when that's going to happen. Right? That's how I think about every single week, and I do that through matching up the economic calendar. I match up looking at price, seeing what it's doing, how it's trading, and I feel no guilt because it's basically what I just said there. It's like if somebody did that to you, you would feel no guilt about not picking that day that's trash. You would feel nothing about it. So in the session, you have to remind yourself, like, man, I have 4 more days left of the week, and probably it's going to be a lot better than this. So what's the point of feeling any type of guilt or emotion or fear? For those of you who revenge trade, if you're able to just sit out the rest of the session, if somebody guaranteed you the next day that you're going to win, you would feel no fear. You would feel no doubt. All that lower confidence that comes in after taking a loss, you start doubting yourself, your system, whatever it is. Even after a couple losses, that can start weighing on you. But if somebody told you, hey man, tomorrow you're gonna win, right? You're gonna make a win, you're gonna make it all back, then you would have no emotion. You would execute your model the same. You would not deviate. You wouldn't do anything differently. So I know that's not a 100% perfection thing, but that's what I remind myself of. Because most of the time, if I take a loss or two, like you saw last week, I took 2 losses, but I understood my model works. I have a quote that Ict said, and I love it. He said, the model works and we'll be fine again soon. Because after I've taken a couple losses, doubt will creep in, even for me, insecurity, low confidence. But I remind myself, the model's not broken. It's just a period of time where it didn't work. It will be fine again soon. Exactly what I did on Friday. I executed the same model on Friday that what I executed on Tuesday or on Wednesday and Thursday that I took losses on. I executed with the same amount of confidence, same amount of patience, same risk management, same everything, and ended up winning. So you have to remind yourself, it's like when you're going through losses, drawdown, you cannot deviate from your model. You cannot move away from it. You can make improvements, adjustments, but if you already have it, don't touch it. Just keep executing it the same way you've always done. Exactly, Alex. I mean, I've been trading these concepts close to 5 years now. I mean, I think backtesting is great. I think I think it's FX replays. Forgive me if I'm wrong, but I believe those ones that give you a percentage, like, this is a 90% hit rate. I think those are falsely inflating your confidence in the model. All I would do, I wouldn't do that. I would just go over old data and I would go through each session, and I would particularly pick out. Most people don't do this in backtesting. Here's a little gem: is go over. This may not be easy for you, especially for a newer trader. Is go over the trades that you would think that you would take a loss on. It may be difficult for you, but if you have a little bit of experience, like if you can go back through backtesting and not inflate your ego and inflate it through only picking the right trades, go through the trades that you probably would have took a loss on. Like, oh yeah, I could have easily seen I would have taken this, and then journal that. Like, how many times have you gone through backtesting and journaled the trades you would have took a loss on? Like, most of you don't do that. And I'm not saying that in a harsh way. I'm just saying because I didn't do that either. But as I learned, if I backtested, that's something I would do. We forget that, yes, even in backtesting, you should be taking losses. Natalia, between ES and IQ, yeah. NQ is making a higher high while ES is dropping off lower. So again, that's another red flag. Don't trade. What PD rate is causing resistance around that? So go out to the 15-minute time frame. Well, if you're actually asking about my chart, this is an old new week opening gap. So this old new week opening gap here is from, let's see, so the algorithm isn't real. These concepts don't work. Okay. Tell me how this random line on here that I have plotted is just so happenly acting as resistance at this point in time. Like, get out of here, man. You're lying to yourself. This is from the 11th of February to the 16th of February. Just this small little point in time, just this random price point is acting as resistance. Like, and you could shout from the rooftops that these concepts work, but until somebody wants to believe it, they're not going to do it. I'm not in the business of convincing anybody that these concepts work. I don't care. But it's just beautiful. It's fascinating. Even somebody with this much experience, it's still very cool. That's why I love new week opening gaps. They're my most favorite PD array. I don't enter off of them, but they're just very fascinating to me. I love them. Zaso, it's a decent question. If Q long and ES is doing something opposite, how would you deal with it? Well, it is a unique situation. It depends on what price is doing that day. Depends how confident I'm in price. But I would have to see that if NQ is still respecting my areas of interest, I would have to see if ES would want to get in line. If it just really starts moving into sync with ES the opposite way of what I was thinking, then I'd probably collapse the trade. It's a unique situation. So yeah, I give myself a lot of grace, man. It's a lot of questions. I understand it. So again, I try to provide the value. I try to put myself in the shoes of if I was just learning, man, and I saw somebody live streaming doing this. I try to give empathy because it's like I would probably be that person in here as well. And not to say you're asking bad questions or anything like that. It is very repetitive to me, but I understand that I was once in your shoes, so I'm not gonna not answer a question. Some people are good at bad at back testing and good on live streaming. Is that possible? Yeah. I mean, I don't think back testing means anything. It doesn't. All you're doing is pattern recognition. It's the same thing as like tape reading here, just in old data. Like you're just pattern recognition. It's the reason why we mark things up is so I can start to see it. I can start to, without me even thinking about it, I can just draw out lines, draw out things that I see without, I don't have to consciously think about it. When you're beginning, you have to consciously think about, okay, is this an inversion? Is it not? Okay, once it is, then I can draw it. Okay, is this buy side? Is this not buy side? Or is this sell side? Oh no, it's buy side. So then I draw buy side. Like these type of things, they'll become unconsciously conscious at one point. Like where I'm just doing this out of habit. I'm not thinking about it. Like once you reach that point, then you know, all right, well, then I'm pretty good at marking out price. I'm pretty good at this price stuff. That's only one piece of the puzzle. Yeah, there's a video on ICT's YouTube channel called New Week Opening Gaps, New Day Opening Gaps. I believe there's 2 videos. There's multiple ways to utilize them, but I'm not going to explain that. So what are we doing in price right now? I mean, we're inside of this inversion here. So this once was a SIBI, right? A sell side fair value gap. We got up above it. Price moved back down into it. Look at the bodies, respecting it. Price should. To me, this would be the last point. Why? Because look at just the basic market structure. This is a higher low. That's a higher low here. This is another higher low. So price shouldn't really break beneath this low if we're going to attack the buy side. And it's building a lot of relative equal highs in here. So to me, this should be taken out. I don't know when, but probably by the end of the silver bullet, next 15 minutes or so. And to me, this is just building in a lot of sell side. So if you're looking at the retail trendline phantom, it's a lot of sell side in here. So I hope today was a good learning experience. I feel pretty decent about the session so far as teaching. Again, days where I'm tape reading, I'm probably going to be doing a lot more teaching, a lot more rambling, versus in a live environment. Your first time here, I'm probably a little bit less talking, and I'm probably more focused on price and taking trades. Do you use event horizons? No, I don't. I know what they are. That's a little bit too much on my chart. What's that? Why did you not enter trade? Chat, answer that question for that person. Thank you, Will. I appreciate it. Manny, I appreciate that. Thank you. Thank you, chat. Let's see, that's a lot easier for me than explaining it. Peter trade. Yep. Psychology is massive, and over time, if you sit with me, I mean, I'm definitely giving out a lot of psychology gems, and it may not resonate with you in the moment, or it may resonate with you, but over time, you'll probably, at least my experience with mentors and people that have taught me psychological things, it's like throughout the session, I'll hear them like just in my memory, vaguely just saying things, and it's like, oh, it reminds me over and over again, don't do something stupid, you know, all those things. So just for the sake of it, I can pull up, this is my SFT chart. That's what I have on my right monitor next to me, but look at the correlation between ES, YM, and NQ right now. You have NQ drifting lower, so look at the, if you want to compare, specifically, like let's look at this 905 high. Do this real quick. So do you see how ES is not above that high there, which is here? Look at where NQ is, it's above the high. Look at where YM is. That's what a bearish SMT. So you have a bearish SMT. They're not in sync. They're not. This is a decoupled market, right? At least NQ is decoupled away from these two. So that's another signal, especially if you're in long. It's like, okay, do I want to keep pushing this price higher? Do I want to keep doing that? If the price is decoupled, again, look at the range that we're in. Price is what it's doing. All of this points to low probability. I don't want to be in it. Can the trade if you're in it. Just be done with the day. Be done with the trade idea. Look at the time that's spent in NQ trying to get from point E to point B. Trying to get to that buy side, it's taking a lot of time. And then you add the bearish S&T factor. You add in the decoupled market factor. Those type of things are pointing to you that, yeah, I probably shouldn't be pushing price. This is not something that I would, be in my favor. Message retrace. James, you want to go up to, forgive me, you want to go to compare. You go to compare, I'll put it on the chart for a second just so you see it. So what's going to happen is most of the time, what in the world? I'm going to have to go back. But most of the time, it's going to end up like this line in here. So what you want to do is you want to go to your settings, go to style, and you're going to change it from line to candles. So then you're going to see the overlaying candlesticks over it. Change to whatever colors you want. After you do that, you click on three dots, you go to move to existing panel below. So then it will look like this, so where it's down here. Then you compare them. That's at least how I do it. I'm sure there's some templates and stuff. There we go. I don't know what was going on. I don't know how to trade. What is trading? This is my first time ever looking at a chart, so forgive me. Would you trade today if we had a news driver event? Depends. Yeah, there's different profiles to Mondays. It's not specifically that's a Monday. There's a lot of other factors that add into it that I've repeated here before. So again, are you thankful or upset if you didn't trade today? Are you happy or mad that you didn't trade? I'm pretty damn happy I didn't trade. I more than likely would have got something wrong. How do you mod? I'm thankful, yeah. And that should be what you should be putting inside of your journal, especially when you're tape reading, is like, I'm thankful I didn't trade today. And even if, you know, you're tape reading on a day that should be a little bit higher probability, I mean, it's still regardless. It's like, you know, I didn't break my rules. I didn't break my discipline. I didn't trade today because I said I wasn't going to. Like, those things are important, especially in trading. If you're doing what you say, you're not breaking the word. It's very important. A7, what's up, brother? Yeah, that's all right, man. I mean, that's a good thing. Just tape reading today. Happy I didn't do anything. Again, we're going to go back to this idea when everybody was comparing somebody else took a trade in here. Do you feel any type of way about it now? Probably not. You're probably like, oh, whew, yeah, I'm happy. So, I mean, I can't describe it enough. Like, it doesn't matter what other people do. It shouldn't affect you. Because really what that's saying is when somebody enters a trade, it goes their way, and you thought, you know, at that moment in time, you were like, man, I was thinking about entering into it too. What you're saying is you don't have enough belief in yourself or belief in your own rules and your discipline to stick to it. I have enough belief, conviction to know that I should not be trading today. That's my particular set of rules, and if I didn't have confidence or conviction within those rules, then I would be doing whatever else everybody else said to do. You have to have conviction. Like, you have to know solely that you're doing the right thing. And you only know that through experience and through time and journaling and doing the right things. WGM, what's up, brother? Good to see you in here. Hope you're doing well. Where's Wazy? I bet he's about to get in here in about a second or so. I wouldn't doubt it. Yep, time is the missing piece the most. I mean, it's you got to go through a lot of time, pain, agony to reach a point of consistency. Exactly, brother. Nailed it on the head. So in here, I mean, think about how many people are, you know, they saw this drop lower, they saw inefficiency here, they're trying to short now. It's like, man, you know, it didn't go in my long buy, so now I'm going to go short. Like, think about how much mistakes you would make in here. I mean, I'm very thankful that I can sit here and say, oh, you know what, I'm not doing anything. It's all I'm thinking about is money being saved, money that's just being protected. Otherwise, I'm just burning through all of it. Think about all the people that, you know, burnt all their money today, how upset they are, and now the rest of the week they have to sit and watch from a view, watch from afar, everybody else have fun in a good environment. Like, I've done this plenty of times where I've blown all my money on a Monday, and I had to sit and watch social media throughout the rest of the week where I had no more money to put into an account. I had to work, you know, several more weeks or months to put into an account, buy another challenge account. I had to go back to demo. Like, those times were awful. It's like I blew it all in one session on a shitty day. And then I had to watch the rest of the week, you know, play out beautifully. And it's like, well, why the hell did I do anything? What was the point? You ask about how did I learn these lessons? It's through an immense amount of pain, immense amount of suffering. How do you fix that behavior? Well, either it's the same theory, same concept as a child touching a hot stove, touching whatever it is. I mean, how many times are you going to touch that hot stove? How many times are you going to keep touching that until you say, you know what, man, I'm done touching it. What the hell am I doing? Either that, or you listen to your parent or a mentor telling you, don't touch it, don't do this. Either you're going to do exactly what they said, or you're going to do the complete opposite and think you know better than them. You're going to think you're smarter, you're going to go in and you're going to touch that hot stove, and then you're going to learn yourself. So there's two ways of doing it. Option A is the best. You listen to the mentor, you listen to the parent telling you not to do that. They know best. They've gone through it. Why would I want anybody else to suffer? Like, I've been through this. That's the reason why I speak like this, because I don't want any of you to experience the pain and the suffering that I've been through. But if you don't listen to the things I'm saying, then of course you're gonna do the same dumb shit I did. So we have about 5 minutes left of the silver bullet macro, and that's basically gonna be it for the session. So, tell me or not throughout this entire live stream, I mean, how much value was in this? If I sat down as a newer student throughout I was learning this and I saw somebody speaking like this, man, I'm not trying to inflate my own ego or boost myself, but I'd be like, holy shit, man. Like, this is the greatest things I've ever heard in my life. It's the same thing ICT was saying. I mean, he always said this about himself. Like, if somebody was speaking like him, which when I heard him, I was like, holy shit. Like, this is crazy. Because it's all experience. Somebody's giving you all the experience they've ever been through. And they're just trying to give it to you. I'm giving it to you for free. I'm not charging you anything. But most people, they think it's free, so it's, you know, it's not valuable, and they'll just throw it away. Cool. Now you see why I don't make these YouTube videos that have clickbait like titles, and I'm not going to go on a rant about it, but because I can't encapsulate all of this inside of a 15-minute trader video. It doesn't work. Like, the only way I'm able to do it is through a long period of time in a live market where I can go over specific topics that are specific to the environment that we're dealing with that day. Like everything we talked about, like I could make a low probability how to stay, you know, seek and destroy video. I could make that, or I could sit through an environment where I tell you beforehand it's going to play out and tell you how to stay out of it. Like, that to me is more valuable. It means I know what I'm talking about. Everybody knows what a low probability environment looks like, but how do you stay out of it? How do you fight through it, sitting through it, not being able to be tempted to go into the market, those type of things. Appreciate it, buddy. Appreciate the kind words. Yeah, dude, where's my signal? I can't pass my challenge account today. It's your fault. So, I mean, here, I don't know. This is 50-50. It's the same thing we did like an hour ago. Basically, it was like with the coin flip. It's like, where is it going now? Is it going higher? Is it going lower? You could flip a coin and make it happen. But what was kind of tipping its hat, even throughout this low probability environment? What was tipping the hat that we went over the SMT chart? That you're looking at the time, like it's spending a lot of time trying to move higher. It's not willing to move higher. It's spending a lot of time in here. And then you look at ES and you look at or YM, and then those are both dropping off lower. Bearish SMT. So this may want to move into sync with them. And look what happened. It moved off lower. How long did it take you to become consistently profitable after committing to the skill? I mean, I would say like 4 years. Like 4 solid, hard years. And some people don't want to believe that. They think they can make it faster. But, I mean, I'm not going to sugarcoat anything. Because I think that if I give a false expectation, you're going to judge yourself. I would give yourself a minimum of 5 years. A minimum. I mean, I've been doing this for 6. And I'm just hitting my stride this year. So, like, to give somebody the false expectation that you should be profitable in 2 years, I mean, you may not even reach any sort of, you may be losing for 2, 3, 4 years like I was. And that's normal. That's fine. That's a normal thing to do. Like, you have to look at it through the perception of, I'm going for a bachelor's degree, I'm going for a doctorate's degree. It may take me 8 years, 10 years to get good at this. But the upside of that is, yeah, you spend a lot of time, but at that, you know, whatever, 6, 8, 10 years, now at that point, dude, I can make money. I can make people's yearly salary in a month and a week. Like, it's such an infinite amount of, you could do anything with this industry. So you have to look at it through that lens. If you're really getting upset about how much time this is taking, it's like, you don't understand the upside of this. It's infinite. It's whatever you want to make it. Would you advise trading in front of live people on YouTube to fix the trade of overtrading? I mean, not really. I think you can fix that habit in private. Put a trade limiter on. I have one on. I have one on my Rhythmic account. I have a daily loss limit. That's besides my funded futures. They have an overall. They don't have a daily, but they have an overall max of 3K. But we cannot hear you, sir. Is that true? I don't think so. But if you can't stop yourself from over trading, then see if you can have a platform where you can have a drawdown limiter, max. Like you set the max amount of money you want to lose, like whatever that is. If you're only comfortable losing $100 that day, 250. Like for me in my account, I know past $300, like that's probably more than enough. I'm over trading at that point. I'm doing too much. I'm likely to make mistakes, so I would have it at that. And as you move up your account, then obviously you can move that max daily loss limit. But if you like trade evade, once you set it, you can't touch it for the rest of the day. That's it. And that's good because most of the time you'll probably lose that and you want to go back in, you want to edit it. You're like, you know what, I'll lose another 200. I can do that. It's like, well, no, you can't. Like, you need to have a third party limiter on you where you cannot touch it anymore. You can't do anything. Vaseline or Vaseline, I'm sorry. I'm sorry, I pronounced your name wrong. I like the way you think about long-term, bro. You open up your community. I'm interested. Yeah, I mean, March is going to be my last month of YouTube live streaming in the public because I've given enough value. I've given enough proof and evidence that I can do this. Like if you haven't seen that, then you're not paying attention. And that's the way I want to do. If I'm ever was going to open up a community, a paid priced Discord, whatever you want to call it, then I should be able to do it for free in a community, and then you should be able to gain value from it and judge if you want to pay to be inside of it. And that way there's no fugazi, there's no smoke and mirrors. I'm not, faking it. You can see with your eyes what I can be doing. And that way you can go into the Discord. It's going to be the same thing. I'm not going to change anything. There's not going to be anything different. No secret enigma I'm going to drop. It's going to be the same boring thing I'm doing over and over again. Like there's nothing that's going to change. The only thing that's going to really change inside of a personal Discord is there's going to be more information in there, things that I'll probably lay out, and then you'll have personal access to me. I mean, that's what you're paying for. I'll have a video over it. I'll post it on YouTube. I mean, I know I'm going to get a lot of backlash on it, especially on Twitter, and I understand that. But guess what? People can't talk shit to me. They can't talk, why are you opening this up? Because guess what? I did this for 3 months in a live setting with a live audience on a live account, and I was able to maintain profitability. I mean, how much could you talk shit to me? You can't. It's the most liberating feeling. Anybody that wants to get popular on social media, like if you have a desire to do so, go inside of a live environment and do it. Nobody can talk anything to you. You can't say anything about me because I sit here and I live do it. Like you walk the walk, man. So I'm already prepared for all the backlash on it, and it is what it is. Some people are going to see it, some people are not. It's fine. Like, if you're wondering, well, if you're profitable, I get this question. If you're profitable, why would you want to open up a paid Discord? It's like, it's such a low IQ question. It's like, why would you not want more money from whatever you're already doing? I mean, it just doesn't make any sense to me when people ask me that. It's like, well, ICT did it for free. It's like, well, no, he didn't. He opened up a paid mentorship and made millions. And there's nothing wrong with that. I worked my ass off to get to the skill set, and I should be able to charge for it. Andrea, I mean, I have it on my Twitter, my stats, but you can just go through the live streams. Again, if you've been here, you've seen me take it. The chat will speak for me. Like, I don't even have to say this. Like, the chat will speak for me because whoever's been here will be able to see what I've been doing. Like, I can't hide anything. I can't fake anything. I can't manipulate it. It's as transparent as it comes. I mean, the quality would probably get way up because I don't have to deal with like toxic trolls and people coming into the chat saying negative things. It's just people that want to be there and learn from me. I'd be able to talk to you guys, in a private setting. It's cool. Yeah, Journal. I mean, that's just it's a male-dominated industry, and you have to think males are very egotistical. Like even me, I try to calm myself a lot of the times, and I understand, but I'm very competitive, and that's where the toxicity comes in. It's like, no, I'm better than you. No, I'm better than you. But if you look at the whole overall aspect and the whole view, it's like we're all doing the same thing to accomplish the same thing, which is basically to break free from slavery, in a sense, modern day slavery, break away from jobs, which I'm not saying they're bad, but in a sense, I mean, we're all trying to seek that freedom. We're trying to seek that time away from jobs and gain time back and be able to do what we love. How much you thinking of charging? I mean, if I would want to do like a ladder system, like where each month becomes cheaper until a point where it just stays flat. So probably like $100, $50, and 25. If you stay loyal, then I mean, you should be rewarded for that, right? And I understand, like even me when I was coming up, like, dude, I don't have $100 to pay monthly. That's some people's insurance, that's some people's groceries. But if you stay for 3 months, $25 a month, I mean, that's me being generous. Like I should be charging 100 consistently, but I mean, it is what it is. Oh shit, I didn't even look at the time. We're done with silver bullets, so I apologize. I've been paying attention to the chat. I mean, that's gonna be it for the day. I hope you guys enjoyed. I hope it was insightful. You learned something. Make sure you guys do subscribe. You do follow me on Twitter. Like the video if you can, if you haven't already. And that's really gonna be it. Till tomorrow. Good luck and good trading, everybody. Peace.